With all these shutdowns, all the supply chains being disrupted, we've had a lot of downside and a lot of fast-moving markets, a lot of volatility, which presents us with a great potential strategy to capture a lot of these moves, a lot of these breakout moves. Hello TradePro and hello YouTube, it's Victor from TradePro Academy, and today we've got another special video for you. As you can see, we are in quarantine here, we are at home, and in today's video I'm going to show you how you guys can make this a better situation. We are currently in a global pandemic here, coronavirus spreading, and I'm going to show you guys how you can make money from home trading the coronavirus. So this is an intermediate strategy that we're going to show you guys that's very good for volatile markets. So it's not just coronavirus, but you can use this in volatile market situations where you can turn a good profit based on super fast moving markets. Instead of catching those crazy trend moves that might whipsaw up and down, we're going to show you a better way that you might catch some of these long extended moves for great profits. So sit back and enjoy this video. So currently, everyone may know we are in a global pandemic. COVID-19 or coronavirus has been spreading, and it's been affecting and unfortunately killing a lot of people throughout the world, which is causing a global financial dismay. So Jerome Powell, US Fed, recently said that we are entering in a recessionary state, but that will be confirmed with 2 negative quarters of GDP. So it's not yet 100%, but it's looking like that, considering that what this quarantine is doing, what all this shutdown is doing, it's closing borders, disrupting the supply chain, getting a lot of people out of jobs, laid off, a lot of unemployment. Government stimulus is pumping in to save these economies, help people out in this time of need. But lucky for some of us traders, we may be able to take advantage of some of this. Even for people who may not be currently taking in a continuous and stable income, this is a good financial education lesson and why you could turn a profit maybe from a disastrous moment. But remember, always get back. So this isn't something to gloat about, but it's something to educate the mass about and show you the opportunity that we do have in the trading market, in the day trading market. So those who are fortunate enough to be able to do this on a continuous basis, urge you to give back. And those who want education, this is the right place to look for it. So with all these shutdowns, all the supply chains being disrupted, we've had a lot of downside and a lot of fast-moving markets, a lot of volatility, which presents us with a great potential strategy to capture a lot of these moves, a lot of these breakout moves. So for those of you at home, which is, I hope, a lot of you, you could be using your time wisely to learn a lot about these financial markets because they're a long-lasting skill, maybe not even day trading, maybe just understanding how financial markets work. That will help you in the long run. So this becomes a good investment opportunity for a lot of people in the coming months if you have the capital. Now, let's go ahead and talk about the strategy a little more. So right now, the volatility is a little more subdued because we're having a little more of a pullback area, a little more consolidation, but we will see a lot more volatility and faster moving markets. Now, we saw that earlier March, late February, and I think we're going to see another wave of faster moving volatile markets. Now, in these super fast volatile markets, generally trading with the trend, looking for pullbacks was the way to go. But with this speed, it's a little more difficult to catch those trend moves. You're not going to get as many rotation and confirmation. So what we're doing is capturing those extended breaks. And what I call this strategy is a stop hunting strategy. So we're going to identify is a breakout strategy where you identify the stops that might be hidden at levels of extremes. So you can't really necessarily know with 100% certainty where the stops are, but if you know how to stop hunt, you can get in on that trend and on that market move to capture all those stops getting hit one by one, one by one, one by one. So this stop hunting strategy is a breakout strategy that's very effective when markets are moving fast, not just COVID, but if we're looking at maybe a more downside market, a market crash, quote unquote, financial crisis, even a skyrocket to the upside, no matter what the market is like, if you have speed and volatility, this is a great strategy for that. We call it the stop hunt strategy or the breakout strategy. But I'm going to go through what it looks like based on price action. We're also going to look at some order flow tools that combine all these things together to look for that really high probability breakout strategy. Now, you can use this on any asset, any fast moving asset, any volatile asset, but what we're going to do with day trade futures. So I'm just going to break it down for you guys here on the S&P 500 that's moving very well over the past few weeks. Now, On my screen here, we have a 20 tick chart. This is a larger macro tick chart, 20 ticks. Every movement up or down, it'll print a new candle at 20 ticks worth. So what I do here is I look at the overall market in a general sense. What you could do is even bump it up. You can go 50 tick, you can go 100 tick to find those levels. So step number one of this strategy, you want to see a more macro view of the market and identify those key extremes, V tops, V bottoms, where price is rejected quickly. And through those levels, what happens is you have uh, either sell stops or buy stops. Buy stops being the stops of everyone who's shorting at a certain level. So buy stops push price higher through those areas where we could look to get long for that buy stop run, or sell stops are the stops that the longs have that have rejected a key support. So under those levels, we look for sell stops or we sell into them to hit those stops. Now, what do these key rejections look like? So number one, remember, we're looking for extremes. So if I grab this pen tool right here and we draw some of the extremes, they look like strong areas of rejection, or V tops or V bottoms could be as well. So this is a strong area of rejection. You can see how price came into it, and it came into it with a lot of buying. Market buying came in, pushing the price higher. Then what happened at this key rejection level? You're looking for areas of rejection. Strong sellers came in. What do you have above there from those strong sellers? You've got their buy stops. So above this level, you have a lot of buy stops accumulated. So what we're looking for is every time it comes into that area, we want to see how much it breaks that area. If it's convincing, we can look for a buy stop run. It gets rejected here. So 3 times of rejection, the more it gets rejected at that level, the more buy stops have accumulated. You can look at it on an intraday basis as well, where you can just grab the extremes of the market and identify those and really be patient and wait for those. And if you have a few inner extremes, so example here and here, you've got key levels of rejection, which are V tops in this scenario, and then right here, a very strong key area of rejection to the downside. So what we've created here by mapping out these extremes, step number 2, identify where the buy stops might be. So the buy stops occur about a point to a point and a half above these key levels, right? So if we break above this level, what we might call the 2600, you know we're going to get a swift move to the upside because the buy stops have accumulated above that area and they're going to get flushed fairly quickly. You're going to get about 3, 4, 5 points worth in a very fast jolt to the upside or downside. Again, we have a key support structure area right here around 2510, 2505, and through that area you get huge sell stops. Now this was a gap from Sunday, so those guys got eaten up fairly quickly. You can assume that there's going to be sell stops below this extreme level now, and then you get another key rejection. So you can go moment by moment, or you can also have these larger encompassing levels. So right now you got a huge V bottom right here, a V top at here. So we've identified 2 more extremes. What we've identified is through this area, 2570 originally, you have buy stops that are going to accumulate and press up. And then back above into the 2600, you've got buy stops that are going to accumulate and press above. So let's see what that looks like in this manner. So you can just wait for these extremes in this particular strategy, wait for them to break. And what you're doing is looking to set a buy stop a few ticks or a point above this key extreme, or a sell stop a few ticks or a point below this extreme to fill you and then flush and collect those points. Now, exactly what we have right here, 25.65, let's call a little closer to what the actual price is. Above 25.65, you're setting up some buy stops. You get this initial burst that moves 15 points. Now, 15 points is a very, very strong move, $750 worth on the S&P 500 E-minis off just one contract. So that's how we identify these. You want to identify those very key extreme levels of rejection on a macro view. Again, if we come here and draw this level, a more accurate view of it is 2605. So if we pop above 2605, so let's say your buy stop is going to be at 2606. If you set a buy stop limit at that area and it flushes through, what do you get? You got to move back up into here, which is the 2615 area. So that's a 10-point move, or $500 on one S&P contract. So all we're doing, very, very simple strategy. I suggest you understand what market structure is first. We have a lot of videos on that, how market structure moves into these levels. But what we're looking for is strong momentum coming into that area, and you're looking for a stop to get you in just above that price, because it could be a head fake. We want to make sure that there is enough room to get you in without head faking you in and taking your stop out. So that's why we say a few ticks or maybe a point and a half above that level, depending on how price moves into that area. Now, based on just pure market structure, all we're doing is identifying these key extremes. You're looking for V bottoms and V tops. So that's the number one rule you want to look for. Those are going to be strong areas of rejection that you want to follow. Strong areas of support that are tested multiple times and resistance, they become those buy stop areas as well. So step number one, you're identifying those extremes. Step number two, identifying where the buy stops may be to either end. Step number three, you're looking for where you want to place your limit. So we could go over into order flow and look at what that seems like. So on order flow, if you want to look at that based on inventory, if you have an extreme right here, so if you're trading this extreme first, you want to buy it above this level for the flush higher, works really well in volatility, you can capture crazy moves. You want to identify this extreme, and in terms of order flow, what you're looking for is big offers having accumulated up there. You don't know if these are stops or if they're going to be limits to actually get into the market. Either way, this large inventory above or below a level, so big offers above a level, big bids below a level, these guys attract price. So price through that level, once it breaks that level, it has a strong magnetism to pull price into those large offers or bids. Now, another tool is, once you've identified that, if you have those offers, so step number four, you want to look for the offers or the bids, the inventory interest level 2 on the DOM that suggests that the break is going to happen after you've identified your key areas of extreme. Once you identify that, you want to see on the footprint if we're coming into a top, if we're getting into the resistance point, into the V top to break for the buy stop, are you getting a lot of buying bounces and market buying coming through that level? If that's a yes, then you've identified a very strong area and a very high probability trade to capture that move to the upside. So what I like to do is just really zoom out and look at this on a larger tick size chart, a 50 tick, 20 tick, 100 tick, whatever it may be, to get those strong areas of extremes, resistance, support, V tops, V bottoms. So let's look at the footprint and see what happens on those levels just through those extremes. So this happened at around, it seems about 1 p.m. Eastern time, March 30th. So let's go back on the footprint in just a second and see what that looks like. So here's that same level on the footprint. I was mistaken by time just slightly, but you can see the area of resistance that we mapped out, we said around 2565 to 2570. It's a little difficult to tell on the 50 tick, but if you drop it down, you can identify a little better in terms of the exact location. If you go down to a 10 tick or your 5 tick to capture that resistance point, you'll identify it a lot more clearly on those smaller levels. But what we're doing on the 50 tick, on the 20 tick, we're just identifying the extreme as just an area. Then you drop down to your smaller tick size and you look at for those exact levels. So remember, we identified this resistance point right here. What happens through this resistance point, you can see it comes in. If you go exactly at this level, if you're going exactly at 69, you're probably going to get stopped out. But what you're looking for is strong market buying. You can see these market buying balances, strong market buying as it comes into that area. Finally, you break with strong market buying. You could look for entries just above these tops. If you enter at an area, 70 half, 70 even, right here, what you're doing is you're getting in as these market buying bounces come and support that price, and we get that pop through the extreme. Now, what we're looking for originally on these breakouts is only 3 points to begin with if you're trading one lots, right? You have the ability, especially if it's super volatile, to extend this target 5 points to 10 points. But in terms of more subdued volatility, just looking at extremes, you just want to go for 3 points on the first lot, and then you'll see what happens after. So boom, it bursts right there from the 70. You're already at the 77. That's a 7-point potential. On this pop, you're probably getting taken out on the pullback, 4.5 to 5 points, just pure price action, lather it on with some inventory, and then top it off with the footprint, and you've got yourself a pretty high probability trading strategy based on all this volatility and volume that's coming out. So where are you entering? How do you enter? Let's take a look at that again. So what we're doing, marking the extreme, step number one. We've marked our extreme right here. This is a strong rejection. We're looking for a rejection level, a V top or a V bottom. We can identify this level if we just pull up this line right here. It comes into consolidation with that top exactly, right? So now what we're doing, we're identifying that level on a smaller tick size. So we've identified that there's going to be buy stops above that level as market structure continuously moves up and market price continuously moves up. So we got the buy stops above that level. Now we drop to a 10 tick and look at that same area and we identify what is that exact level. So that exact level based on that V top, we can scrunch this chart up a little here to give us a better indication of what we're looking at, is going to be right into this structural resistance right here, right? This was the area that we were watching for. Number 1 here, number 2 here. So if you catch this original breakout from this area and you're going 70 to the upside, this looks like a cluster of nonsense, right? But from the breakout from the 70, you get a move all the way up to 72 originally, right? So this looks like a clustered move. Yeah, some of these buy stops, they might not be the best setup trades, but remember, we identified this level right here. It was actually at these 73s or so based on the larger scale. Yeah, you can look at this, get in around, sorry, that's 69. Get in at 69, you're looking for 3 points. That's the top of this area, 72. So that becomes a 3-point move. If this thing doesn't go quickly, the idea behind the breakout trade and the buy stop is to capture this move very quickly. You get, even if it looks like a cluster, you get a chance based on this V-top break, you get a chance of at least 3 points on this move. Take it quickly, and if it reverses against you, you want out. Now look, you get another chance at this level. This becomes a peak extreme based on what we saw in the 50 tick, right? Peak extreme around these 72s. What you're doing, you're looking at the chart right here. What did we identify? We identified around that 70 based on this. But what we're really identifying is now we're looking at that 72, 73 based on some of this order flow. You want to see some offers come in at this area. What time is this at? You can pinpoint it to about 10:35 based on some of this price action right here. So what we're doing is looking for buy stops through that level. If you look into order flow, 35 right here through that break, there it is, right? What we're looking for, we said that 73 area, what happened? Buyers, buy imbalances, market buying. And that previous area, you saw it looked like a good buy stop run as well. So you're getting a move, an extended move, again, 4 or 5 points. That's all you need at this point. It works a lot better in the more volatile market conditions, but if you can identify extremes, even in more subdued market environments, you will find that there's a potential for these breakout stops. So this is a quick little video on how to actually go through a more intermediate strategy to trade throughout this lockdown, to trade throughout this quarantine. So I hope you guys are out there safe, and I hope you guys enjoyed this video. Drop a like, hit that subscribe button, and we'll be with you next time around. Take care, everyone.